Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, December 20th. Okay, we're greeted by a lot of red this morning. Just taking a quick look at futures. I show equities down about between 1.2 and 1.6%. Commodities getting decimated. Oil's down quite a bit. The only thing I saw green was nat gas. Running over into macro, not a lot this morning, but something fairly significant, and that's the leading economic indicators report comes out at 10. And then before the bell, we've got Carnival Cruise Lines. And then after the bell, we've got Micron and Nike, two big names. Of course, Micron in the semiconductor space and Nike in footwear and apparel. Big name. So let's just kind of recap where we've been at over the past week. We said going into the FOMC that we knew that there was going to be a regime shift. And whenever you have a regime shift, you've got to expect volatility and turbulence. It's kind of like that idea where you've got a cold air mass and a warm air mass, and they come together, and that's where you get the heavy weather, the tornadoes, the thunderstorms, all that kind of stuff. And just like the weather, when you got a high pressure system, everything is more or less calm. And then if you got a low pressure system, everything is cooler, but stable, right? Stable. But it's when the regime shift happens that you get the turbulence. Now, we went into the Fed, and then we saw that big relief rally where everybody was positioned off sides. And then that turned out to be fake, and we had the big down day on Thursday. And then Friday, we had the quadruple witching, which was the big option expiration for December. And then we said, now don't forget, after all that positioning rolls off, you've got the makings of the week following a big options. There's more of a tendency to have volatility. So you've got the regime shift, you've got the option expiration roll-off, and you've also got the holidays. What does that mean? Lower liquidity. There's a lot of people going on vacation. There's a lot of people that have had very good years, and they're saying, as we've talked about before, coming out of Thanksgiving and into December, they may be thinking, you know what? I more or less killed it this year. I'm not going to battle this bull crap and risk, giving half of it back by being on the wrong side. I'm going to enjoy the holidays. I'm going to spend time with my family. I'm going to recharge my batteries. I'm going to get the F out, more or less downscale for the holidays. And I'll pick it up, the first or second week of January, and I won't miss a thing. So you've got that element. And I think that's where you've got to make some decisions here entering into this week. And maybe you started thinking about that last week, because we did talk about that a little bit. Do you really want to fight it over this holiday period with the added volatility and the fact that we've got, the holidays where you probably want to spend some time with your family, get ready for the new year? And I think if you fundamentally say, you know what, I've had a good year, I'm getting out, I'll be flat for a month, who cares? Or 3 weeks or 2 weeks, whatever you decide. I mean, that's fine. I just, as I've gotten older, I've come to the point of recognition that you're kind of in it or you're out of it. I wouldn't recommend kind of half doing it. If you're distracted with wanting to do stuff with your family, and then you're trying to trade off your iPhone, and you're kind of half in it, that usually doesn't work out really well. So put your priority on your family and getting your batteries recharged, and then you can decide what length of time that is, what does that exactly mean for you. But so we may have an extended period here of added volatility. Now, if you're an active trader and you don't have a lot going on, it can be a really good time. If you're good with the volatility and that's an environment that you're super comfortable in, then trade it if that's what you want to do. But I'm just saying, now's kind of a time where you got to decide what you're doing. And also, as what I'm going to do today is zoom back out to the daily time frame. And this is a point where we're at an inflection point, I believe, and you're going to have to decide within your portfolio what is really long term and what were just trades. And so if you've got, let's just say, Microsoft in there as an example, and you've made a decision, I'm never selling, I'm in it till the end, and you get a 10 or 20% drawdown, you're not worried about it. If it was just a trade, then maybe you do worry about it. So let's get into it. Okay, getting back to the VIX. This morning, we had this open gap above that we said was probably going to fill sooner or later. Well, we've been up into the 27s pre-market, and now VIX is down here around 25 as I'm starting the video here at 7 a.m. And don't forget to run your player at 1.25 to 1.5x to get through this quickly. I expect this to fill this morning in the regular session. If we jump over to the McClellan oscillators, they're really no help at this point. They're in the middle of the range. Maybe after today's selling, we'll get a dip down into the minus 60 range. I kind of doubt it. That's a big move for one particular day, but we'll just have to see. And just a reminder to those uninitiated or new here, when the oscillator gets down into this minus 60 to minus 90 range, things are very extended. It's an end of day measurement, so you can't really look at it during the day and say, oh, okay, now it's overextended. It's kind of an educated guess. But when it gets down here to minus 60, minus 90 or beyond, you're set for a rebound rally. It's just too far extended to the downside. And that indicator has been really, really good to us over the years. And I like to keep an eye on it, especially when things get a little turbulent. So as I said, I want to pull back to the daily time frame to give you an idea where we're at. SPY, notice the drop off in momentum and drop off in RSI. We made 4 runs at the top and we could not break out. So that 470 level has proven to be quite a wall at this point. I've got a pretty orderly uptrend penciled in here with the midpoint here dashed. We've got the lower part of the channel down here at 455, and we've got the 50-day moving average here at what do we got? Well, 457.50 more or less. So I think today you're just keying off the 50 and you're keying off the bottom of the trend line here at about 455. Remember, we've got a level here, the prior breakout at 450. That was, there was a little test here, not much of one. But we had a big test at the beginning of December, right after Thanksgiving, where we made 3 big runs to try to break 450 and they couldn't do it. I think probably, if they come down here and test it again, that'll be a huge, huge level. Why? Because then you would have, if it breaks, you would have lost this prior breakout level. And that's never a good thing when you go back into a trading range after you broke out. You never like to see that as a technician. And also remember our trading rules. Doesn't matter what time frame you're on. If you are below the 8 and the 20, which we are now, you become tactically defensive, because if price is below the 8 and the 20, you've lost that strong uptrend. Now we've got the 50 coming in here at 457. So if you get if price were to drop out and below the 50 and below the bottom of the trend line, then you've got to be defensive on your trading positions, and you've almost got to figure on a test of 450. And then if you lose 450, I would be outright bearish, and figure on a move down towards 435 over time. That doesn't have to be in a straight line, but then I think you make this line here at 450 like triple thick, because then all of this up here is resistance, and then to get back, you got to break back above, and I don't think that's going to be a particularly easy thing to do. So for today on SPY, key off the 50 and the bottom of the trend line, and keep this 450 in major focus here. And so remember, on the 2-hour chart, the 50 is here in gold off of the daily. We will most likely open somewhere down in here below. I don't know exactly where. And then we'll have that gap above. And if you got a quick fill of the gap above, I would be looking to fade that. I think now is a time where you want to be, the regime has shifted towards sell the rips before it was buy the dips. So I think now, during this volatility period, I think you want to flip your script towards favoring selling the rips, and then you can tactically buy support, but I think you want to favor the other side of the trade at this time. Let's move ahead to the Qs, where we've seen a lot of weakness lately. What I did here was box in this range between 400 and like 381. So, you can just round that down to 380 and say, look, if we break below that, then note that this was a prior breakout level. And so we're testing that breakout right now. And if you were to break below, that means you had a $20 trading range that resolved to the downside, and that would put your measured move down $20, which puts you at 360, which puts you at the 200. So I think that's kind of what I'm thinking, and that's all predicated on if price drops out below 380. And it's a little different here because of the extra weakness we've seen in QQQ, that we're already below the 50. You see the 8 and the 20 are up here, and then we've got the 50 in green. We're already below that, and now we're testing this this large volume over price bar here, and support at 380 where the prior breakout was. You really don't want to see that break. Then you really are kind of on the wrong side of the chart. You lost the breakout, you lost the 50, and now you've got a measured move target down at 360, $20 lower. So that's going to be really, really important to get that right. And here on the 2 hour, I just showed you, this is just a zoom in on what I just showed you. You've got the 200, or excuse me, you've got the 50 EMA on the daily right here at 387. We closed today on Friday at 385, more or less, and we're going to be testing this 380 here this morning at some point with a gap above. And like I said, if you get, if they decide to make a run up here to 385 and close that gap, that overhead gap this morning, that's where I would hit it short with a stop just above, and then look for them to come back down and test this prior low. And like we said, if it breaks 380, that's going to bring in a whole new wave of sellers, in my opinion. IWM, we've been talking about this for a while. We had, just to recap, we had this massive year-long consolidation between 232 and 210. So we got basically a $20, $23 range here. We had the exciting breakout we were all waiting for back here in October. We got a big move up to 343. Then they came back to retest the breakout, and then that failed. We had that big gap down, and now we're down towards 210, testing the bottom of this big box. And just like we talked about on the Qs, if you were to, or if price were to lose this 210, then you've got a $20 or more measured move on price that would bring you down to 190. Fill this gap, move down here. And then once you did that, that would look like a giant year-long market top on small caps, right? Because you would have, had this big year-long top, real choppy action, fake breakout, drop below the box, and then move down into the low 200s and 190s, and then that would look like a massive top, and that wouldn't be so hot for the market. 2 hour, we're down here at the bottom of the chart. You can see this downtrend has contained all the moves higher, and now we're testing this 210 down here. And just like I showed you on the daily chart, you get below 210, I think that's a I hate to say stuff like no-brainer short, but it's the objective trade. If you lose the bottom of a $20 trading range, just like we said on the Qs, that's a very objective level to get short. Now that doesn't mean it's going to work, but the odds are definitely in your favor, and it's definitely objective to be short IWM if it loses 210. So that's the way I would play that, definitely on IWM. So moving into FATMAAN, Facebook. We got to me, it's kind of a simple setup. You've got all these moving averages close together here. You've got the 200 at 325 right here. I would use the 200 right at 325 as your pivot. As long as it holds the 200, I would say, you're fine. But once you lose the 200, I think you're going to come down here to 312 and probably even 300 to test this prior low. And then if you lost 300, I think, there's got to be a lot of other turbulence going on in the mega cap tech world. I think you'll see all of them roll over if they go after the generals, which Facebook is one of them. I think they're going to be hitting all of them. So 325, and you can use that as a rule of thumb on any stock that you trade. Once you lose the 200 is always a pivot point, and once you lose the 200, you're on the price is on the wrong side of the whole chart, and then you should be looking towards the downside for sure on any stock that loses its 200 moving average. So here on Apple, one of the strongest stocks in the market. We had the breakout here, came back to this 170 level, and now I looked pre-market. We're trading down around 167 area. So I would key off of, you've got the 20, you've got 166 here on this little ledge, but once you lose 166 or so, I think you're going to come back down to test the 50 right here at, let's call it 160. And then that will be your next level of support. I would take note where the uptrend line is and where the 200 comes in. If things get turbulent, I would be looking down towards the 200 and a back test of this uptrend line on Apple if things start rolling downhill. But first things first, we haven't even lost the 20 yet. So there may end up being a big rotation into ultra high quality, and Apple certainly fits that category. So as people, bail out on bubble tech and Ponzi tech, big dreams, no earnings at all, no profits at all. They may decide to go, I still want defensive tech, which is mega cap tech. So it remains to be seen whether Apple and Microsoft and all these guys either roll over or stay strong during this period. So don't speculate, just go level to level like we always talk about here at the 20 and the 50. Tesla really at an important point here on the daily chart. We went up, we lost this key level at 1,000. It has rolled over. Now it's at the uptrend line from back here in June. We filled this gap on Friday, and so now we're right here, well below the 50, testing this trend. If we lose this trend line, I think we're going to come back down to 860, more or less, and then in all likelihood come down to the 200 at that comes in right at 800. And you can see that there's a relative void in the chart here, and then you've got a big zone of value between 800 and what is that, 560. So that's a big range right here, and you can see that was a level that we kind of broke out from here at 800. So and then if you lost the 200 there, if you get a move back below 800, you've got to almost abandon your long ideas for a while, because just as we just talked about, once you lose the 200, price is on the wrong side of the chart, and then that would be a super long-term pivot right there at the 200. Microsoft has been pretty strong. We had the run up to 345. We came down to this 322.50. We got another run at the top, which failed, came back down. And so now we're at the confluence of technical support at 322.50. And you can see that that's right where the 50-day comes in, right here, right around 322.50. I think the trade is straightforward. If you're below 322.50, you want to be short with a stop just above. Why? Well, you'd be below technical support. You'd be below the 50. You've got a massive void here in the chart where not a lot of trading happened. You've got an unfilled gap down here between 315 and 310 that needs to get filled. And then you've got a breakout here that was never back tested. So this could be a situation where you get a breakout and then a back test, and then your major moment of truth is at 305. Why? Because that was your breakout point. And if you were to lose that, then I think you're coming back to the 200 way down here at 287.50. So watch 322.50 very carefully this morning. We made a deep look below on Friday, and they bought it back up to save it. But that was just one day. So we'll have to see what happens today on that 322.50. Amazon has been very, very choppy and a little bit unstable. Certainly has lost the uptrend. We had a nice move here from the 1st of October down at, let's just call it 31.75, and went all the way up here to 37.50. But then it put in this double top, as you can see, and has rolled over. We had an uptrend line here that was lost, and now we're testing the 200 at 33.50. And if you were to lose that, then I think you're going to come down here to, 33.50. Then you've got 32.50. And I think you're going to come back down here to this large volume over price bar at 31.75 for a test. And then, but at that point, you're well below the 200. You're below the midpoint of this consolidation box. And remember, our rule of thumb is you break out of the box, you come back in, then your target is the bottom of the box. Now, we didn't get that this time. We only got to move halfway, which held, but still the rule of thumb is still in place, but you still got to go level to level. So below the 200, I would target 32.50, then 31.75, then 3100, then 29.50 on the way down, if that's the way it wants to go. Google Daily lost the 50 on Friday, lost this consolidation triangle. I think the first big test is 2,800 even, right here on this large volume over price bar, largest on the chart. You really got to hold that level. And because that volume over price bar is so high, if you wanted to entertain the idea of a short on Google, I would do it right there at 2,800. You can see here that that was tested 4 or 5 times just a few weeks ago. And so now if you lost 2,800, my first target would come right in here at 2,700. So that would be my first target there. And then this prior low, and then you can see that the 200-day comes right in here, more or less at 2,600. So I think potentially you could get $200 of downside on Google if they decide to go after mega cap tech and make a run at the 200 across the board of all those names. You can see on Netflix here, it's already there. So I would use the 200 as your pivot point, and then a really big level will be this 560 level. Why? That was the top of a $90 trading range. And then if you were to break below, just like all the other ones, once you break back into that old trading range, then your target will be $90 lower. So Netflix has been a little weaker compared to all the others. And then let's wrap it up here with semiconductor ETF. Of course, we've got Micron this afternoon after the bell, but we've got a $20 trading range right here from 315 down to, let's just call it 295. It's actually like 290, 250, and that's right where the 50-day comes in. It's very, very clean. If you break below 290, 250, you will have lost the 50. You'll have broken this trading range, and then your target becomes 275, which works out really well for the measured move target, but that was also a breakout level back here. So I think that would be under 290, 250. I think 275 is your target. You may get a little reaction here on this unfilled gap, but I think at the end of the day, if you lose the 50, I think it's going to come and backtest this breakout. So be ready for added vol. Decide what you want to do, kind of strategically. What is long-term? What are trading positions? Decide if your heart's really in it, if you really got the time to devote to trading without a lot of distractions with the holiday. Don't forget to put family first. You only have Christmas once a year. Make sure you make the most of it. And don't forget, I highly recommend that you take a little time off at some point, maybe between Christmas and the New Year, but get a week for yourself where you can recharge your batteries, come back and tackle 2022 with everything you got. I think it's going to be a really good year. So you got to be fresh heading into the new year. So if you're new here, thank you so much for stopping by. I hope you benefited from the analysis. Please hit the subscribe and the like button, and then jump over to the show notes. You can register for all my content. You'll find a link there where it takes 5 seconds to drop in your email. Then you'll get all my content, morning, noon, or night, over the holidays, whenever, right to your email box. You won't have to hunt for it on social media. So have a good day of trading, and talk to you next time.